All right, everybody, what's going on? It's been a while since I've done a live and figured I would just go ahead and do that. Markets are rough, man. Can't complain too much, but at the same time, it's a little bit difficult when you're down about a house in most US cities. Um, have had some interesting conversations with a lot of different folks, and I think many anticipate that the pain is far from over with respect to the markets, but who knows? It's a long term game for people like myself. Um, and I've continued to just add capital, more so specifically taking capital from my 401k that I have, generally speaking, sitting in cash or short term investments. That was mostly just like a comparable money market account. And I've moved that to the S&P 500. But every time I get a little bit of money from any paycheck or anything of the like, I try to throw that as fast as I can into the markets. And it's been quickly being burned up by the fact that we're continuing to decrease rather rapidly, I should say. Um, yeah, things have turned down for the worst since really the August timeframe. It was kind of a pivotal moment. Let me clean up some of these tabs here so that way we can chat a little bit more comfortably. But let me pull up my screen here. Share screen. Looking at the S&P, you can see we peaked out here rather recently in mid-August, and it's really only been downhill since then, down, I think, over 15% since then. And I think the pain might continue to go further and further down to the downside. And as I've alluded to, I'm not going to say, told you so or anything of the like, but high oil prices bring low oil prices. And we've seen just how horrid the folks that have invested in some of these um, energy stocks at the peak have done. And, I tried to help people to recognize that with kind of what we were seeing, and I wish I kind of took my own advice, because had I took my own advice, it would have been prudent for me to probably take some more cash out of my accounts and move money back into, say, cash accounts or something like that. But instead, I listened to my own advice on oil, was able to move some of that into the S&P, was able to move some of that into Shell specifically. Shell is probably my preferred long-term energy investment. So I took that opportunity to move cash into that. But overall, recently, it's just been me pouring more money into the S&P, pouring more money into Palantir, pouring more money into Rocket Lab. I was heavily encouraged by Rocket Lab's Investor Day presentation, encouraged by Karp seeming to get more and more camera time, and not calming himself down, but articulating a little bit more about what people are really wanting in recent times. So it's interesting to kind of see him, I guess, I don't want to say mature is not the right word, but get a little bit more polished in terms of a public CEO. Whereas before, I think he's let the private side of the business, where he's able to speak candidly with employees, really dictate how things have gone in the past. Now I think he's recognized that his words for retail investors, those that are probably more short-term investors, coupled with those that are long-term investors like myself, you can't address them in the same manner. And so I think people are realizing that. But I wouldn't have expected to get back down to this 360, 365 range. So I continue to be humbled by the amount of inflation, and truly learning from this experience. I would say definitely being humbled. I did not anticipate, because we're in a midterm year, the extensiveness of what we've seen in terms of the Fed raising interest rates to the extent that they have. I think that this is something that was pretty aggressive. So if you just kind of look at the U.S. Treasury yield curve, which I'll pull up here, man, I'd love to see one that compares it to a year ago. I had it. Literally had it yesterday when I was looking at something, and it's pretty aggressive. Um, here you go. This is pretty cool. Let's pull this bad boy up. StreamYard is showing. So let's see. So thought this was pretty interesting to take a quick look at. You can see specifically, here's the spread of the 10-year and 2-year. Actually, this is 10-year, 1-year spread. But most people say that when it kind of crosses a zero line, so basically that the 1-year is yielding more than the 2-year. Sorry, the 1-year is yielding more than the 10-year. Generally speaking, people do the 2-year minus the 10-year. But if it goes negative, it's generally viewed as a recession is incoming, and you can kind of see it's followed by these gray lines. But anyway, what I was really pulling this up for is looking specifically at, and they have this wrong, historical 1-year minus 10 years, what it should be. So wait, no, you're right. It is right. Sorry, don't listen to me. You are seeing this massive decrease where short-term interest rates were basically negligible in the first year for, say, the notes that you were buying. Now you're actually to get something like 4%, which is pretty impressive. Mortgage rates are over 7%. Since I've been in the market, potential market, I should say, for buying a house, it's never been that high. Even in 2018 time period, I think it jumped to the mid fours, never got above 5%, probably due to the pace, and there was still little inflation in the market. So I think the coupling of inflation coupled with the federal funds rate has really pushed the 30-year, and I think they're even quoting over 7% now. So I think that that's going to have huge impact on prices going forward. I've seen not even over the past 2 months, but over like 2 months and 3 months ago, I was seeing prices in places that saw massive expansion in 2020, 2021. They might have been more rural areas like Idaho and stuff like that. I've seen granted, it's been 2 to 3 months since I've seen these articles, the exact opposite going online on some of these areas. So it's interesting to see, and that's before we've seen almost 3.75 rate hikes in a row. Granted, we did the 0.75 in May, we did the 0.75 in June, we took August off, we now just obviously raised 0.75 again. So it begs to, I guess, see where people think that the inflation trend is going. And I think I've seen some really good data from when the FOMC shared their projected materials. So let's pull that up because I think it's pretty cool. I think, man, there's a graph that I saw. I don't want this table, man. This table doesn't do us justice. But there's a really cool table, and it partly gets me excited based off of the projections, because I think when people hear, oh, it's going to be until, basically people are picking or nitpicking the piece of what Jerome Powell had said in his message, which was, we're not going to get back down to 2% inflation until 2025. What they neglected to say was their forecast based off of how aggressive they're being right now with the federal funds rate and how much they think that they're going to be able to stop inflation in its tracks over the coming months, that inflation will be on average 2.8% in 2023, 2.5% to 2.3% in 2023. And so is this it? I would love to see this. No, that's not it. So I think that that's encouraging, right? I mean, to me, 2 to 3% inflation is the same thing. It might not be the same thing to you, but for me, that is basically the same thing. So I feel like you could say whatever you would like, but at the end of the day, I don't think you'd be able to truly be able to tell a true difference between, let's just say, a 2 to 3% inflation rate, whereas the difference between 8-9% versus 2% is very, very much different. So I'm literally just looking for this graph, man, and it was a really, really good graph. And I really, but basically, what it shows is it shows how quickly inflation um, has grown. So I'll pull up that graph, and we'll kind of look specifically at that. I should have prepared a little bit more, so I appreciate everyone's patience. But looking specifically at CPI, here you go. Oh, that's not it. That's since like the 20s of last, like, uh, however long ago. What is this specifically? Consumer Price Index, CPI. I don't know what it's pulling up. What's this? Is it? One of the things that also intrigued me, and I'll pull this up because I know where this website lies, is the FOMC balance sheet. And maybe while I have that up, I can do some other work associated with it. But let me post this in here where you had this balance sheet. So obviously everyone remembers TARP, right? The I don't know, trash assets relief program. I forget what it was, tangible assets relief program. I forget what it was called. But that's what this big bump is here. This goes from, 890 or so million on the balance sheet for the Federal Reserve to just under 2.2 trillion. And remember, everyone was talking about quantitative easing throughout time. They were buying, $10 billion here and there over time. And that's when it really ballooned up to this $4.4 trillion piece. And it kind of leveled off at this 4.5 trillion. And they slowly started to unravel it in 2017, 2018. And they took their time. And then I think the repo market went out of control. And then they started buying again. And this is when they started to raise rates the first time. And it wasn't really too out of control. You did see a reversal a little bit where they were trying to ease things out. It was still able to roll off about $300 billion. But then obviously they started doing these stimulus programs here. And that's truly when you started seeing the huge reversal in the market. So this, keep in mind, this is like March 2020. So by the time you get to the June of 2020, that's when you saw that big V-shape recovery in the S&P 500, if you guys remember that. And maybe I could pull that up quickly. It's when basically this is the equivalent as we kind of hit this March 2020 timeframe, and by the time you got to the June-ish timeframe, all that money had kind of been put back into buying the notes and mortgage-backed securities and stuff of the like that really helped the bond market out. And then they continued to buy, what was it, $50 to $100 billion a month worth of assets. And they've really only started to let things roll off into the quantitative tapering. And I think what everyone thinks is because they were able to buy, $50 to $100 billion worth of mortgage-backed securities or something of the like, it's going to go down as quickly as it came up. And that's not the truth, right? If you want the truth as to what's truly going to happen, this quantitative tapering is them just going to allow those bonds to kind of roll off. So they're not going to sell those bonds. They're just going to allow the money to kind of accumulate in their kind of checking accounts, but they're not going to basically continue to purchase those, right? So the money that they're using is just going to kind of like disappear, right? They're just going to kind of eat that money. They're not going to sell the $8.5 billion worth of bonds and mortgage-backed securities that they have, because that would kill the market forever. And that would literally be the end of the U.S. economy in my anticipation. So, or my perspective. So what they're going to do is just slowly let those things, they could be 1-year securities. Like, it depends on how long wavelength those securities were. So to me, what I think is going to end up happening is it took a while. They stopped buying, I think, in Marchish time frame. So it took a while for things to actually start to move and turn around. Like if you actually start zooming in a little bit in it, it peaked out and it kind of hung around until the June-ish time frame at the 8.9 trillion mark, and it's now just recently started to move down to the right. And so before, what it was they were just kind of letting the 30 billion or 45 billion a month kind of roll off. Now they're doing that 90 billion a month rolling off, but they're not going to sell. And I think that that's where a lot of people are confused about what's kind of going on, is that they're going to magically sell all these different things and it's going to completely destroy. And I don't think that's going to be the case. What I think is going to be the case is you're just not going to have that low yield that you used to have, because nobody's buying up all these bonds and providing that liquidity in the bond market as they used to have. So yeah, I mean, I could go on forever and ever and kind of go off on my tangents of what I think is going on, but I'd rather talk to you guys and see what's going on. There's 12 of you in here. I appreciate it. I don't normally do live streams. It's something that I am anticipating on doing a little bit more now that I don't do them on Fridays too much in a partnership anymore. I do like a Palantir weekly one with some friends. It's like 11 p.m. Eastern. So if you guys are interested, be sure to check out my buddy Amit and look up Palantir Weekly Amit, and he'll probably be the first person. I've been invited back a couple weeks in a row, so I guess they like my experience with Palantir. But going specifically into some of the questions, and feel free to load up more. Would you be getting into a mortgage within the next 6 months at this rate? It's really up to personal preference, right? I mean, to me, I've honestly, because of where I am in my career and the industry I'm in, I've always thought that I could go international. And just to be blunt, like I got a potential prospective job in the Middle East and for an interview in the Middle East, earlier this week. So it's like me wanting to buy a house doesn't necessarily make sense unless the company I work for is willing to kind of rent out the house in kind of my, I guess, term that I'm away. So I've always kind of just avoided a house. And plus I've always just been like, well, how long is it until my time here is up in Houston? Most of my family lives in Pennsylvania still. So I've always kind of wondered at what point have I kind of like exhausted my time away from home, and do I eventually go back? So for me, the only reason I would get into a mortgage is if I was able to put a substantial amount down and I was kind of like have a mindset shift of where I am in my life. And if I move back to say Pennsylvania, it'd probably be more prudent for me to buy a home because that has always been home for me. So if I'm here in Houston, the only time I'd get a mortgage per se is if it was an investment property. I've been looking at short-term rentals. I'm not going to get specific about what they are, but buying land and kind of doing more of a short-term rental thing through Airbnb. So I've thought about that, and I think me and a buddy and a partner might go and try to check out some land associated with that. But I think it's really up to you, man. Like, it depends what the mortgage is for. I think if it's for living, I don't think it's going to be too tough. If you have the capital and you can make it through and you can lock in a rate at 6 or 7%, I don't think it's going to be too long until things turn around a little bit. I think in late 23, early 24, you might be able to refinance that and shave a couple $100 a month off that mortgage payment. Do I think we're ever going to go back to say 2.5 to 3% mortgage rates? That's hard to say. I don't think it's something that I would consider possible in the coming months, just based off of how things are kind of going in the markets. What do I think of Tattooed Chef? I don't really think about it at all, or have an opinion about it at all. I know that many people were really into it. When people were really into the Tattooed Chefs of the world last year in 2021, I was really more so focusing on Virgin Galactic, which I ate a lot of capital on, made a lot of money in covered calls, but I knew it was either going to go to zero or do really well. Rocket Lab was another one that I liked because I like rockets, and I think that that's a huge space and a huge total addressable market opening up for that. And then I also have Palantir, which I bought in September of 2020 when they direct listed. And so I've been very much concentrated on those 3 positions. And I had some other positions here and there, but they were really small. I did invest in IPO D, E, and F when they were kind of like par value. And when I think I did IPO B and C. So I think IPO B was SoFi. When that went into the 20s, I sold. So I made some money on that. And then IPO C was Open Door. And I also sold that at like in the high teens or something like that. So I did well on those. Granted, they were really small positions. I think I only bought like 100 shares. So it's pretty baby money. IPO D, E, and F. I think I ended up selling E and F. Was it IPO E that turned into SoFi? I'm trying to remember them all, but IPO E, that one turned into something, and I sold that at a profit. IPO D and F, I think I sold basically for negligible money. So yeah, there's that. Then what else is there? But yeah, I've mostly been focusing on Palantir. For me, I think Palantir, once again, and I always try to explain this with any of my investments, Wish I did horrible on in 2021 as well. I wasn't really a SPAC, but Wish did horrible. And there was another one I did horrible on. I think Alibaba was one that I was kind of speculative on. I'm still holding Alibaba. So Wish I completely just got lost in whatever the CEO was saying, and I got completely destroyed in that one. But it wasn't enough that it truly ruined me as, I guess, a whole portfolio, but it did hurt because it was a couple percentage. With respect to Palantir is a company that I have a big stakeholdership in terms of like I work with them pretty significantly. And then the shareholdership has been since September of 2020. So Palantir for me, it's a very long-term hold. It's something that I don't think people are going to truly understand until it gets a good market share. So I anticipate it being a 2030 hold, and I've said that since I bought it in 2020. And that's where I kind of have left it. I continue to buy shares. I want to get it to closer to 4,000 shares. I'm currently at about 3,600. I don't remember. I've been buying, a couple shares a day whenever I get some money in the cash register. So that one, I think personally, if you have an opportunity to put risk on the table and you're looking for a conviction play, do your due diligence. And I think that could be a good opportunity. I think it's a good opportunity, but like I said, I like to allocate some of these pieces to being a couple percentage points of my portfolio and nothing larger than that. And so I would recommend majority of people do that, because that, while they are cash flow positive, and if you take out the share-based compensation, which I know everyone likes to say, makes them cash flow negative. If you take out the cash flow and you look at it, then sorry, somebody messaged me. Then they have money, and they're going to continue to build a treasure chest, and they have about $2 billion worth of cash on hand. And so I think they're going to be able to weather the storm. And they're about to announce some pretty big contracts that they've been sitting on. And I've used their software. I use their software daily, and I'm pretty ecstatic about it. And I think that they're doing really well. I think a lot of people that are in that space acknowledge that they're a pretty good company. And I think a lot of people that are in the public space think that they're going to do horribly. And Snowflake and Databricks are going to take over. But honestly, I think that they're kind of in different realms. I think Databricks and Snowflake might be more along the lines of like really simple products. It's more of like a Microsoft Excel or something like that. Whereas, in my opinion, Palantir is trying to be and build something that people don't even recognize that they need as of yet. So to me, I think Palantir is ahead of the game. It's an operating system focused around data. Just like how you go on Excel or something like that. It's like you can do whatever the hell you want in Excel, or you can get on the computer and you're like, oh, well, I'm going to go stream, or I'm going to play video games, or I'm going to do X or Y. Instead, you're getting on this operating system and you're doing data analytics, and you're focusing specifically around data and pulling data directly from pressure monitors or temperature sensors or all those different things. And I don't think people kind of really recognize that. But do I do any long-term options currently? No, really the only thing I'm doing is writing covered calls on a lot of my positions. And that's obviously done well over the past month because everything's gone to shit. But I don't really do too many puts at the moment. I might when I get a little bit more cash in the cash register. But most of the time I focus specifically on the covered call side of things. And that's just because, and I don't do really close to the money. I would have made a lot of money if I did that in August, but I mostly focus on the 5 delta, which gets you to pretty far away on the whatever the current stock price is. So I wait for a little bit of run up in the price. I don't really like to write covered calls on a down day, but then I just let theta do its work, man. I just let time eat away at that contract, and that's really what I'm doing with respect to the option side. And that's why I do SPY instead of VOO or IVV. And a lot of people are like, oh, but the expense ratio is more. It's like, well, the liquidity of the options market on SPY versus VOO or IVV is drastically different. A lot better on SPY. And so you can make up that extra expense ratio very easily. But yeah, Darth apparently wants to get on, man. But I'm making him sweat a little bit because he probably already left because he's like, oh, Darth's very much, I'm going to be on my time and can't accommodate others. But now that he sees me on live, pulling people in, he's all about it. But nah, I'm just joking, man. But let me send you the StreamYard link via Twitter. And maybe I wasn't planning on being here too long, but if you're willing to get on, then maybe have a quick chat really quick. Yeah, curious what other questions y'all you don't need to download StreamYard, man. It's just you just go onto it like a website. It's nothing big. You don't need to download anything. But yeah, I'm curious what other questions you guys have, man. More than happy to chat. But if nobody really has any questions, I'll probably just wait for Dorothy to show up. And then actually, it's getting pretty dark in here. Alexa, turn on all the lights. There you go. It's a little bit better. So yeah, just wait for Hot Darth to hop on. You can see the green screen's dying behind me. It's getting darker. Did it get like cloudy over downtown? Yeah, it got a little gloomy. I thought it was nicer out. Anyway, Dorothy's taking his time. Darth, I sent it to your DMs on Twitter. I go down on the DMs. I go down in the DMs. Darth's probably going to tell me I'm poor because I'm not investing in dividend stocks. And God knows what else. But yeah, I'm curious. I don't know. There's a few new names on here that I haven't seen, like War Baby. I think I might have seen you in the past. Nathan, I feel like I've seen you in the past, maybe with Zeke. Some of you guys. So if you guys have any questions, feel free to put them in the chat. I'm more than happy. Are you leaning towards Airbnb or straight monthly rentals? For me, what I'm potentially looking at currently is Airbnbs, but not going to be like try to do a whole thing on that. I'm just going to try it out. It's also going to be a place that I think I might potentially use. Not going to be like try to do a whole You're in, just going to try it out. It's also going to be a place that I think I might potentially. Yeah, that's going to be more of a place that I could get away if I need to, if it's not rented out. But Dorothy,
What's up?
What's going on, man?
Uh, just back at the parents' house, getting ready for my travel nursing assignment tomorrow. God,
Dude,
still feeling it from the vaccine. It's like 2 days, tore up. I
what?
think
Just
you're playing
just
hard
from
to get.
work?
I sent you a text earlier today.
Did you?
Yeah. Oh, did I? See, look at you. But yeah, I was trying to see if you were available Sunday and stuff. But
Yeah,
God,
no, you're a high flyer, man. You're a hard man to get a track of.
ugh, been busy.
Yeah. Um, so yeah, I'm more than happy to do something on Sunday, depending on what time. Unfortunately, I got a call like 2 or 3 hours ago, and they were like, "Oh, by the way, we need this to be done by Monday. One of the executives is coming into town, so unfortunately, I'm going to be working this weekend." So,
It's all good.
um, but yeah, if it's just like 30 minutes an hour, I can definitely sneak
We
away.
can do that. I mean, I'm starting to
Yeah,
have more time. I'm trying to knock out my clinical hours pretty quick, so I get more time with collaboration. So we'll see.
you're a high flyer, man. How you
Busy.
liking it?
Travel nursing or just in
Both,
general?
both.
Travel nursing, it's nice because I mean the environment that I was at previously, it wasn't the best, so it's good to switch things up. It's like when you're at your job or like your favorite restaurant, they have new management, change the recipes around. It's time to move on. It's just not the
Mm,
same. So had to move on and go from there. And the money's there, so I'm ready to start turbocharging my dividends.
hot Darth, man. Oh, it's got a little snifter action.
Yeah,
Is that a whiskey or is that a beer?
it's bourbon actually.
Ah,
Yeah, I need. I'm a little congested and stuff. This weather and stuff. I actually tested myself for COVID today. I was fine, but ugh,
Jesus, is it getting
fucking
cold up there?
sucks.
What's going on?
I don't know. My sinuses suck.
Jesus.
Oh, I gotta show you some in the background. This is where my niece is playing the basement. Little like house over here.
Oh, there
It's
you go.
probably we have a house for Dave. So in the future,
Yeah,
Dave.
when Dave's ready to settle down.
Yeah, Dave. Dave can hang out and play over here.
There you go. One day.
Yeah. So what's new on your side, man?
Not much, man. Losing a shit ton of money in the stock market. That's pretty much all it is. But
Yeah, I mean, I just made a traditional IRA today, and I have mostly Vanguard funds, and let me make sure like I'm looking at the camera right, but I have VGT, VTI, and VHT. So they're pretty good. They've done pretty well against the S&P. So we'll see what happens.
VHC is what? A Vanguard high. What did you say? V what?
VHT, Vanguard Healthcare.
Ah, fancy, fancy. Mr.
Yeah, and then
Bossman.
VGT I think is better than QQQ expense ratio wise, and the just the long term has done pretty well. It has more stocks in it.
Yeah, VGT. I've done some analysis on it. I forget what it was. It was like one of them had more semiconductors than the other.
Mm-hmm.
But I know what you mean. It's not too bad. Yeah, comparatively to QQQ. QQQ's down more, I think.
Yeah, and it has a little
Qs are
bit.
down probably like close to 35% at this point.
Yeah, I mean technology's taken a big hit. Of course, we're not in a recession, so what's crazy over here? There's actually two hospitals that closed over here in
Really?
Northeast Ohio. So they just said the economy's bad and they really couldn't keep up. So I'm just saying.
So you're a VTI guy, huh? You're not
Uh, yeah, I mean, it has like 4,000 companies. I have my mutual fund with, I think it's the total stock market Admiral shares
yeah.
with my previous employer. I rolled over everything in that. There's just so many companies. So if one, company like Apple takes a hit, there's like, like 4,000 other companies to back them up. So,
So is
there's
there any particular reason why that as opposed to the S&P 500, or you just like the exposure to the additional small caps, mid caps that you didn't get out of the S&P?
It's hard to tell. I mean, you want to get one that's cheaper. I mean, you can buy in and it'll grow eventually, but the S&P is still pretty good. I mean, everybody wants to beat the S&P. It's like the Alabama college football. So funds. That's just how they are. But I just like it. I'm just gonna park my money in just dollar cost average every Monday. So that's my play money and stuff. Since my employer, current employer, doesn't have 403b, because like once you travel for a year, because most people travel around companies, so I'm just gonna start a traditional IRA and then go from there. But
Is
I'm
it
really,
so? This is your first time with the traditional IRA?
yeah, I'm
Okay.
pretty sure with my income bracket that's going to be setting up, like that's what I qualify for. So that's what I'm going to
Oh, you
do.
mean you don't think you'll be able to qualify for the Roth because of the income?
Yeah, pretty much.
We'll have it. We don't need to talk about this here, but I mean,
Yeah,
have I ever talked to you about a backdoor Roth or anything like that, or are you
yeah.
not interested?
Some people have mentioned that. I have to do more digging into that, honestly. But yeah, that's one option.
And you're doing it. You're doing it with Vanguard. Your traditional.
Yeah,
Oh, okay, then you're good, man. Yeah, like all you have to do is it's kind of a pain in the ass, but you don't have to, right? It's all dependent on what you want to do. But I unfortunately have to deal with this, as you probably are well aware, and I've had to for the past couple of years. But all you really have to do is put some money in a traditional, invest it or don't. You know, if you just kind of leave it as cash, that
hmm
it's not going to be too big of a deal, because then all you have to worry about is the money market funds rate, which now I guess has a little bit, but it would only be a couple dollars. And after a month or two, maybe 3 months, if you just call up Vanguard and you say, "Hey, I want to recharacterize my traditional IRA as a Roth IRA,"
hmm
um, then you're going to be fine. It'll just roll over directly. And the only thing you're out to do is just note that you're not going to get that pre-tax benefit that you were from the traditional. So
right,
it's not like you can write the $6,000 off of your taxable income and then put it in the Roth. You're kind of foregoing that because you're doing the recharacterization. But
right.
whatever you do, don't call Vanguard and say, "Hey, I want to do a backdoor IRA." Backdoor is kind of like a no-no word, right?
hmm
But if you say recharacterization, then it's perfectly
Yeah,
easy.
I have mine on M1 Finance, so I can try that.
Okay. Yeah, I don't know about M1. You could probably look up recharacterization on M1 and maybe they come up with something, but I don't know.
Not a bad idea.
But yeah, like I said, it's up to you. I'm actually starting to go down the path where taxes for me the past couple years have been killer. So I do the traditional IRA as of late just because taxes have been very, very hard on me over the
Yeah,
past couple of years.
I could see that. Your
Yeah.
income. You're trying to say you're poor, but my gosh, with the money you're making and dividends and stuff, it's amazing.
I'm poor, man. I've always been poor. I'm trying to be poor forever. But yeah, no, it's been tough. Like the market, like keeping steady in a market like this is difficult, especially at a portfolio size um, that I've kind of grown to. It's definitely like makes you question. You're like, I could have bought a couple houses. I could have done.
Yeah,
Um, so it's definitely it's definitely a different game, and hopefully when things kind of turn around and I don't expect the market to go back to the moon, but when things kind of relief a little bit and things kind of aren't as uncertain as they currently are, I anticipate things getting better. So
that's true. You should probably post on Twitter that we're live.
you should post on Twitter that we're live.
All right.
People like you more than they like me.
All right. No, that's not true. I think Mona likes you better than me. So,
Everyone likes you more than me, Dorothy.
well, I do have a mouth on me, though. Let me find her link. I'll post it.
Yeah, I'll post it real quick.
Yeah, go for it. I'll share it.
So what are you getting into this weekend? Anything crazy?
I work tomorrow and Sunday. I'm gonna probably just post videos and stuff,
Okay.
and then like work on charting and stuff. So, and then Monday I got my rotation, so might lay low for a little bit.
High flyer, man. I'm telling you. That's why
Yeah,
they pay the big bucks.
yeah. I mean, it's crazy. Travel nurses make more than nurse practitioners. So it's my last year in nurse practitioner school. So yeah, I'm doing well. I mean, I just got to get my hours out of the way. I set it up to where I'm taking I took the courses first. That way I can do my rotations and not sweat bullets like worrying about my classes at the same time. So it was a good strategy.
Mm.
Plus, during the pandemic, all I did was like I took a year off after I graduated from my RN to BSN, and like literally just worked so many hours and stuff. Just like made a killing with my 403b when the pandemic hit because that huge dip happened. I mean, the paychecks were coming in. What sucks is my employer stopped matching our 403b, which is messed up.
That is messed
But
up.
but pretty much I work like 50, 60 hours a week. I mean, there's no gym open, there's nothing. So what am I going to do? So I just worked. So I just picked up and worked and just made a killing in my portfolio with a dip.
When I dip, you dip, we dip. Well, I'm glad that you like stuck with it because I feel like a lot of people that are kind of here and have been kind of. I mean, you've been around for quite a few years at this point on
Yeah,
YouTube. A lot of people have kind of deserted it with ad rates drying up and
I know
everything.
it sucks.
You're gonna pass me here soon enough. So
Yeah, it's not a numbers game. It's just what you enjoy doing. But
you're good at the hustle game, man. I'm more of a slow and steady wins the race kind of guy. And I get home and sometimes I'll have a really good idea for a video and then I just completely just lack and just don't do it. But you're pretty good at keeping up with it.
I just post videos and speak my mind.
Yeah. And drink delicious bourbon. What kind of bourbon is it?
Knob Creek,
Okay.
strong. Ugh, opens up.
Knob Creek. That's not too bad. I've had it before. Can't complain with it. But yeah. So I don't know, Hot Darth. What's going down? What stocks are we buying?
So what stocks? Arbor Realty Trust. I'm so upset about Store Capital. I can't believe that.
Why they're getting bought out? You don't want it?
I'm just upset. I'm really butthurt over it. To be honest, I'm surprised. Excuse me, but yeah, they since they got acquired, I'm probably going to sell the shares. Maybe just throw them in Arbor Realty Trust and go from there.
What about Arbor do you fancy more than, say, like a Stag Industrial or a Realty Income?
Well, Realty Income is a real deal. I mean, there's no ifs, ands, or buts. I mean, you own how many shares? I mean, what? I mean, you make what, 100?
I always get my Ultra Group, Stag Industrial, and Realty Income share count mixed up. I think I have 450 shares of O.
So Arbor Realty Trust is a mortgage-backed real estate investment trust. It has done so well against the S&P. Its revenue has done well, and it's just so organized. It's surprising that a mortgage-backed REIT does really well. You see NOI or you see AGNC, I mean, they suck. I mean, they just stand strong. I mean, it's just surprising that a mortgage-backed REIT has done so well against the S&P. I mean, I'll repeat that again. It's incredible. I mean, it's like a unicorn stock. Price per share, it's doing well, and it has a good yield. And so, as a REIT, I mean, 90% of what they make has to go back to us as investors. So, you don't want to put all your eggs in one basket. But my goal is to get to 400 shares and go from there.
You said it's a mortgage REIT, though?
Yeah.
So is it specifically around loan origination, or do they actually own physical assets as well?
I'm pretty sure it's just, the term of a mortgage-backed REIT with what they do with loans and all that. But I mean, if you go to macro trends, their revenue is like so well. It's doing so well. It's incredible.
Okay. Yeah, so you're right. It looks like they mostly just do loan origination. I'm curious how a business like that would fare in this particular market. I'm curious to see because if things continue to dry up, I mean, it's going to be a balance, right? So they're going to be able to get more per loan in terms of interest, but how many loans are they going to get in a market like this?
Yeah, it's true. I mean, this will be a test for them. I mean, you see IVR, they just got destroyed. They haven't rebounded at all.
IVR?
Yeah.
Invesco Mortgage Capital, huh?
Well, they did a reverse stock split. I mean, that's saved themselves from getting delisted. So, I mean, that's a big thing. I'm pretty sure that's what they did. I mean, look at how bad they took a dip. I mean, a lot of people capitalized on the dip, and I threw some play money in it. It's sometimes it's okay to have play money and throw stuff in, see what
Yeah.
happens. But I wouldn't, you know, throw $1,000 in it. Like
Yeah.
the
Have you ever one that I used to have a good bit of was Main Street Capital. I
well, I
don't know if
still
you
have
ever.
those guys. I love
Yeah.
them.
So they do. They're not really mortgages. They're more like mezzanine loans for small businesses.
Yeah, I mean they're the
So that
bees.
might be challenged at the moment. But if it dips, I used to have a lot of shares in this. It was like between O and Main Street Capital. These guys, I was trying to stack as much as I could. And then I think when they stopped doing the special dividends, because they used to do 12 monthly dividends a year, and then they used to do 2 special dividends, one in the middle of the year, one towards the end or the beginning of the year. I forget what it was. When they stopped doing the special dividends, this is when I stopped. I sold it. I think it was probably because I thought it was getting towards the peak. I think I sold it in the 40-41 range, and I think it ran up, and I got pretty scared that I made a bad decision, but it looks like it didn't go too much above that, and it's kind of been hanging out. But if that one takes a dive here with what's going on in the economy, I probably might pick that one back up for a rebound play personally.
Yeah, I mean I like it. I mean I one of the what was it? Something on WeFunder, like they sold their company, like they weren't happy about stuff, so they sold their shares to investors, and the leftover money that I got from that, I just threw it into Main Street Capital.
So what's another Darth dividend special?
Dark dividend special. Maybe I looked at AFCG Gamma. That's another like mortgage-backed real estate investment trust focused on the marijuana sector. So that one is looking pretty strong right now, and it's like
Interesting.
a new kid on the block.
And question, is it specifically for dividend
I mean,
appreciation or is it
yeah, I mean income. They focus on income.
okay?
They pretty much. I'm pretty much sure they say on their website what a like REIT does and like how much they can help with investors. Like the income that they make, like the 90% goes back to investors.
No, I meant specifically you. Like you're mostly focusing on income.
Well, I mean, I want growth too. I mean, I have growth stocks too. I mean, we had a discussion about that. Don't always chase yields. I mean, there's yield traps out there, but I like the 3 to 5% range usually. But there are some that are a little bit higher that are decent. But you have to be careful after like 4 or 5%. You have to really do some digging. You know, because I mean, you see something like, gosh, what's one? BGS. I mean, I was into that stock. It was a good like grocery store stock, but it started going up, and then all of a sudden you started seeing the debt, and it's like, ooh, okay, I'm gonna sell that and throw it into something else better. So it,
Mm.
you know, realty income. I mean, what would you consider a high yield? 3% or more? I mean, that's what textbook a lot of people say on Seeking Alpha. Um, but I like the 3 to 5% range. But again, there's Wendy's, they're about 2% dividend yield. I mean that looks like a pretty good dividend growth stock. That's one that I sold, for a profit, but I'm considering rebuying. I mean, people are driving like crazy to Wendy's in the drive-through all the time.
Right here first.
So it just depends on what your philosophy is. I want to be a little bit more aggressive now, and then like a year or two, be a little bit more conservative with some of my growth stocks.
So I have a question. Like, are you a fan at all of any speculative growth stocks, or is it mostly just when you say growth, you're talking about a balanced approach to it, where you're looking at, say, VTI or your VGT a little bit, and is that the approach you're really taking? Is really just the VGI and VTI and VGT realm, or are you actually investing in individual, say, speculative positions that you anticipate will grow?
So, like, are you saying for my traditional IRA, or are you just
I'm
saying?
just saying in general, like I'm a big believer in some speculative positions. Like I have a huge position in stable stocks. Like I have a big Palantir, sorry, big Pepsi, big Johnson & Johnson, big S&P 500 position.
Big
And
companies?
then I also have the covered call ETFs. But I have large conviction play bets within stuff like Palantir and
I don't do that.
Rocket Labs and stuff like that. You're not a
No, I mean, I remember we were talking about Well Tower. Like, there's a company that I invested in. I mean, WeFunder and all that, and the crowdfunding. Like, I'll put money here and there. And Circle Medical Group got acquired by their shares, and their company got acquired by what is it? Well Health Technologies or something with Canada.
Oh, okay. Yeah.
But I mean, I don't really do SPACs or anything like that. I mean, I kind of do the Kevin O'Leary philosophy. Like, if I'm going to invest something, I want something out of it, like a dividend, pretty much. That's what O'Leary says.
Okay. And I guess for the long term, is it like, do you have a dividend income goal? Do you have a net worth goal? I mean, what would Darth do? Where are you going after?
I think my long-term goal is about $2,000 to $4,000 a month in quarterly dividends, which is easily obtainable, and then about $1,000 to $3,000 a month in my monthly dividends. So, I mean, that's obtainable too. I mean, you're
Yeah.
pretty much going to be like that soon with your monthly dividends.
Yeah.
So, I mean,
Yeah, I guess that's the thing, is like, it's a balance, right? The thing that I think I've always gotten trapped with respect to dividends is always just like trying to get too aggressive or too smart. And it's a fine balance between what I've found is it's a very fine balance between what is a great company that's continuing to squeeze the remaining margins that they can out of the business versus are they continuing to innovate into the organization that will continue to have them be the long-term players that they are. The problem that I see with dividends as a whole is I think people get trapped in that yield trap, like I've been trapped
yeah,
before. And you don't hear many companies lasting 100 years or 50 years at
right.
all. They either get merged with or go belly up. And so when you hear companies that have had the great track records of 50 years to 100 years, it's like, well, are they going to continue to persist and continue to innovate and continue to be relevant in the world as things change and the world matures and palettes change and economies change and just everything, technology and economies change as a whole? Are they going to continue to be able to adapt, or are they spending too much of that capital by giving it back to shareholders? And that's kind of always been like this circle in my head that I try to understand.
Well, I think about it this way. I mean, I think about it straightforward. Like McDonald's, people are going to drive for fast food. Altria, people are going to smoke. Johnson Johnson, people are going to buy Tylenol. They're going to use Johnson Johnson products. JP Morgan, it's a bank stock. It's a really reputable company. It's going to be around. I mean, who's going to beat JP Morgan? Key Bank, it's a regional bank. It's strong. Huntington Bank shares. I mean, it's an undervalued dividend stock in my opinion. HBAN, you want to look at that one, has a decent dividend yield too. So my goal is 400 shares in that one. But those companies I believe are going to be around because Pfizer, people need antibiotics, people need certain medications that they carry. VTRS, I mean, those meds are going to be around. There's evidence-based practice that these medications work, and I don't see that these guys changing as a company.
So for people that are just getting into the market, especially in a time like this where it's very volatile and kind of panicky, very low sentiment, what would you say? Right? I mean, what would you encourage people to do what Darth does, or would you encourage people to look at what their objectives are and plan according to what they think?
Are you just talking about throwing money in, or are you just talking about just what to buy?
I'm just talking about, say somebody sees that it's a great opportunity. They've never truly gotten themselves into the markets before. They see that we're down 25% on the SPY, 35% on the Qs, and they're saying, holy shit, what would Darth do? Would you say that what Darth is doing is the actual true best way to go, or would you encourage them to find their own path?
I mean, there's you got to figure out your dividend investing philosophy. That's one thing, or your investing philosophy. Everybody has a philosophy. It evolves. It changes over time. I mean, we discussed that in our spaces, like your philosophy of dividend investing and mine. I mean, I like to integrate my philosophy with a lot of people's philosophies. But with this dip and stuff, I say dollar cost average every week and then go in for the kill when there's dips. I mean, why not? The market will fix itself. It always does.
Yeah.
I mean, that's just me. I mean, Arbor Realty Trust, they take a big dip. I go in for the kill. Dollar cost average, I still go in for the kill if there's a big dip.
Mm-hmm. So I'm curious because I feel like when I was doing the dividend investing thing, I was very similar to you, where I would invest a little bit into a company and get to a place where it's like you see so many opportunities and it's almost like your positions expand pretty substantially. You go from like 20 holdings to like 40 holdings. I'm not saying that's where you're at, but I'm just saying what I used to do is I kind of used to like balloon the amount of holdings and then over time shrink. Do you see yourself do that a lot, or am I just alone in when I did that?
I mean, Dividend Dream has a lot of stocks and she makes a lot of money. I don't know if you ever watched her videos, but she has a lot of stocks and she generates a lot of income. But my philosophy is to get to 400 shares in certain stocks and then leave them alone, then buy other stuff. So it just depends. I mean, certain stocks distribute dividends at a certain time. Like, Arbor distributed, I forget the schedule, but, it depends on the dividend schedule. I mean, and, the companies and all that. So, I just believe 400 shares is a good thing, and then just move on and then buy, other stocks that are hot.
Mm-hmm. And I guess my question is like, you're saying 400 shares, right? 400 shares of something like Amazon or 400 shares of something like Google is way bigger than, say, like a Realty Income or a Stag Industrial and Arbor.
Right.
Does that play into effect at all, or are you saying you're limiting your share prices at all, or?
Sometimes, but again, I mean, those are good stocks. Those are good dividend growth stocks, solid dividend growth stocks for a reason. Dividend Kings, Dividend Aristocrats. Like Ross, Dapper Dividends. I mean, he got to 100 shares of Pepsi, which is huge. That's one thing that I want to do with stocks like that. Maybe get to 100. Pepsi or Coca-Cola, maybe 100. But some of them, they're so cheap right now. Get to 400 and then just move on. I don't know. It's just my philosophy. I mean, everybody's different, but that's just the way I roll.
No, I hear you. I think one of the things, I mean, as you get older and as your portfolio grows, I know your goals will change too, right? Because you get closer to them, and you're always ambitious and forward looking, and so your goals always change.
Well, remember,
for me, sorry, go ahead.
I was going to say, remember, I'm more new to dividend investing than you are. I started in 2019. I didn't know what the hell I was doing.
Okay.
I didn't know what the hell I was doing in the beginning.
Well, I still don't know what the hell I'm doing, but I'm trying my best. No, yeah, okay. So that provides good context. For some reason, I thought you were like more in the 2016, 2017 timeframe when you started.
No, I learned overnight how to do it. Literally watched a video of Ian's PPC Ian, like how to dividend invest. I'm like, wow, this is easy. Like overnight, I learned how to do it. I started deciding to like make a YouTube channel. So I started with nursing, and then I changed from GB Merce to Dark Dividend, and all of a sudden Gen X Dividend Investor started like jumping on my chats and like grilling me. I'm like, damn, this guy knows his stuff. And then I learned a lot from him.
Yeah. Yeah, he's a pretty prudent investor. He's done really well for himself, and he's provided back a pretty good bit to the community. So I can't talk negatively on the guy.
What about you? You've done really well for the community as well.
I try. What was I say? Do you do a lot of cover call ETFs, or you try to stay away?
Yes and no. I mean, like I did a video with QYLD, RYLD, and XYLD. Like it's not going to hike its dividend. It's within a range of like 17 cents, 23 cents. Like with QYLD and RYLD, it's never going to go above. Like the one time in like December 2021, it was like 40 cents, but it's not going to be like that all the time. It's It's just a high yield thing. There's a high expense ratio. I mean, if I can get to $100 on each of them, that's great. But I'm not going to start investing in it again.
Mhm.
You
I
know,
think I think it's difficult, right? Because you're always going to be stuck in this cycle of, the market, generally speaking, every 5-6 years on average. Of course, we've kind of been fortunate, excluding the pandemic, to not really have too very large of drawdowns since the 2008 financial crisis. The QLDs, XYLDs, and of the world do relatively well in very decent bull markets, and then like like all indices, they take a large impact when the majority of the indices take a hit, right? So
yeah,
XYLD, RYLD, all of them right now have taken a very large hit comparatively to each other. The problem lies when the, as you already know, so I'm preaching to the choir, but the problem lies where the markets do turn around and have a sustained
right,
rally. And while we're down, say, 15% or so in the month of August, if we were to turn around and go 15% up in the month of October, you would not nearly get that much return on the XYLD, RYLD because they're limiting the capital gains, right?
right,
And that's part of the reason why they're making the income that they are.
right,
And so they're always going to kind of stay within like this oscillation period.
right,
And that kind of bothers me a little bit. And for me, that's why I've kind of leaned more towards like an XYLG,
right. I remember you said
which
that.
has like a little bit. It mostly just is like an S&P 500, but it only writes covered calls on half the position.
Uh huh.
Um, so you're able to at least get a little bit more of that capital upside. And to me,
Right,
like I don't need an 8-9% yield, right? I'd be cool if, by the time I get to my portfolio size that I want, I'd be cool honestly with like a 4% yield. Um, Eventually, I would love to just have like 2.5 million in the S&P, and then kind of take what that gets in terms of dividend yield. But um, that's obviously going to be a very small yield. It'll be close to 30 grand a year, maybe 32 grand a year, in sort of a income just from that. But anyway, so yeah, I was just kind of curious about that and how much you kind of put trust into those, because I think some people love them to death.
no, I don't religiously like love them. Like some people like post on like Twitter and stuff about how amazing it is. It's okay, but I mean, it's not going to be like the long term stuff. Give me
Yeah,
1 second. I'll be right back.
yeah. Darth is a high flyer, man. But yeah, I'm curious what you other guys are looking like in the wings here. Or you guys more so into the XYLDs, RYLDs of the world? I know early 2021, Dave, GW, Stock Ninja, um, and I forget his name now because he's changed it a few times. Is it retire with? No, not retire with options. Jesus, Thumper. I forget what
Oh,
his
where's Thumper?
Thumper's. He got a house, man. He's living the dream. He's doing relatively well. Um, and I think I wanted to. He changed his YouTube name, and I'm forgetting it. But I always kind of remembered him as Thumper. But I don't know if it's retire with more now or if it's still options with Thumper or what. Um, but anyway, yeah, we watched it like a hawk, and we were kind of just acknowledging that it wasn't performing as we would expect in 2021. And once we kind of saw some like down months where it was specifically Nusi as well, which I think people have kind of caught on that Nusi doesn't do nearly as well as a collared ETF as many people anticipate.
Yeah.
So yeah, we've kind of written those off, and I've slowly through time removed more and more of my XYLDs, RYLDs, QYLDs. I think I'm completely out of RYLD. I moved all that into XYLG, I think.
I don't
But
blame
I'm
you.
mostly like a Devo, Jeppy, and
JEPQ.
XYLG kind of guy. What is it? What'd you say?
You like JEPQ?
No, I never really looked at it. I could. I just never looked at it.
That's an interesting one. I was always asking you about Agree Realty Corporation. Look up ADC real quick. I see these guys as a rival to
What is
Realty
it?
Income.
ADC?
Yeah, these guys are very similar to Realty Income as a monthly dividend real estate investment trust. So the board of directors in 2001 said we're going to be a monthly dividend REIT, and that put them on the map. I was going to see if you ever considered investing in those guys.
No.
Yeah,
To
you
be
got to
honest,
check them
I'd
out.
have to look at their portfolio, but one that I've looked at more so is in the past, and there's my one friend Bailey, who I talk to pretty regularly. She helps out a good bit. She's a really smart investor in the UK, and she kind of turned me on to Prologis, which is PLD, and they're
Yeah,
kind of like a warehouse REIT that got hugely impacted rather recently with Amazon calling quits, basically not quits, but the shuttering of some of their warehouses and stuff. And with that, Prologis has taken a very substantial cut in their price. They were at about 168,
wow.
now they're about 108, and their dividend yield has kind of come into a better return, but than what it was before. It was like in the low ones beforehand, but now it's kind of stabilized itself a little bit. But that one, I think, when things kind of flatten out and turn around, could be one that I potentially put a little bit of capital into, because it has a little bit more of that international exposure than maybe a Stag or a Realty Income.
Yeah, I mean, Stag is their dividend growth kind of sucks. I'm not happy about it, but it's slow. I mean, I have shares in them. I'm going to hold on to them, but kind of disappointed with their dividend growth.
Mm.
How do you feel about that?
About which one, sorry?
Stag's dividend growth?
It's been lackluster, man. I've been invested in it since 2013 or 2014, and I'm pretty disappointed because if I remember correctly, when I started investing in it, it was already at 11.5 cents, or it was 11.5 cents.
Uh huh.
And let me just pull it up so we can kind of talk apples to apples. Okay, it doesn't go back too far.
Yeah, you'll have to check out the dividend history with Agree Realty Corporation since you're on here. I mean, you can probably pull that up. It's pretty nice.
Is it trillions?
I wish.
Can you do like an annual? Anyway, I don't.
Go to Nasdaq.com. I mean, that's a good one for dividend trends.
Yeah, I generally do Nasdaq.
Nasdaq.com. Then you can go to dividend history.
So Agree Realty. What would Darth do? Pull this bad boy up for Darcy. So it's the future, man.
Yeah, I mean,
I'm assuming this is when they went from a quarterly to a monthly.
Yeah, what a ballsy move, man. That put them on the map right away.
Yeah, those damn retirees, they like their monthly dividends.
Oh yeah.
But yeah, I wanted to check out Stag as well, because I think Stag's been rather lackluster.
I know, it's sad.
And I started investing in 2014, 2015. Okay, so it was like 10.5, 11.5, or 11 cents ish. And then they've kind of been every year and a half, it looks like they slowly raise it. But they keep up with inflation, I guess. So you can't, well, maybe not this year, but.
That's what turned me off with land. Land is actually a pretty good farmland REIT, but their dividend growth sucks. Gladstone Land Corporation.
Yeah, I've looked at land because I want to get more involved in planned acquisition, but yeah, their yield is a little bit stagnant.
I know, it's sad.
But well, anyway, Dorothy, I wasn't planning on staying this long, so I'm not trying to cut you off. But if
Playing
we
too
are
hard to
planning
bet
on
again.
coming in Sunday,
You could probably
just
do
let
that.
me know
Sunday
when
night.
works for you.
Yeah, you're playing too hard to get right now, aren't you?
I'm not playing hard to get. I'm
my
the one
lead,
that
my focus
invited
up.
you on. You're the one
I'll-
that's like, oh, in like 3 months from now, I might have 10 minutes to come on a live stream.
I told
Um,
you after I get my schedule set, it's on. So
mhm.
just send me a text or call me.
Sounds good, man. But yeah, I will be on stream a little bit later. I know I do the stream on Amit's channel. I don't know if you know Amit or not, but so I'll be doing that. But in the meantime, I got to go run and do some errands before that, and I think that starts at 10. Yeah, 10 my time, so 11 your time because you're on rich people time over in the East Coast.
East Coast, Ohio time, yeah.
Yeah. All right, man. It's a pleasure talking to you. I'll see you soon.
All right, have a good one.
All right, cheers, man.
Great chatting with you.
Yep, you too.